Fail for a very specific reason. They treat the global financial markets like a casino, constantly pulling the lever to satisfy a biological need for a daily rush of adrenaline. When you force a trade every single day just to feel the action, you mathematically guarantee the slow destruction of your account. The spread and the bad decisions will bleed you dry. That exact compulsion is what makes this Day 3 trading challenge so intensely difficult. The first 2 days were a brutal test of survival, characterized by heavy emotional pressure and chaotic price movements. To actually survive and beat the market, a trader has to conquer their own internal wiring. You have to actively suppress the desire to be entertained. While amateurs are desperately looking for a reason to click buy or sell, professional traders rely on their ultimate operational edge. They simply wait. This graph illustrates the concept of a high-probability opportunity. To find a legitimate setup, you have to filter out 99% of the market's erratic daily movements, the noise, and wait for the data to align perfectly. After 2 agonizing days of sitting on my hands and watching the noise, that exact clean setup finally appeared. Professional trading is completely devoid of fast twitch reflexes. It is the brutal, boring discipline of doing absolutely nothing until the market effectively forces your hand. The window of opportunity opened during the London session, with my entire focus narrowed down to a single currency pair, the euro against the US dollar. Almost immediately, the market structure looked entirely different from the chaos of yesterday. The erratic swings were gone, replaced by a highly readable pattern. This candlestick chart shows the exact setup. Price action moves upward, bouncing predictably off a clear, ascending diagonal trend line. What made this compelling was secondary confirmation, buyers aggressively defending a horizontal support zone. As price drops into the shaded area, upward momentum quietly builds. Spotting that structural alignment is purely intellectual. The true psychological test is refusing to jump in early and waiting for the market to give you absolute confirmation. Finally, the tension snapped, and the breakout occurred. The charts printed strong bullish candles. Volume immediately spiked, and upward momentum accelerated in seconds. I executed the entry. No emotional gambling, no guessing. Just a precise entry with strictly controlled, pre-calculated risk parameters. The market's reaction was immediate and violent. Buyers took total, unhesitating control, driving the price explosively upward without a single pullback. A massive upward surge like that is rarely the result of luck. It is the direct mathematical reward for maintaining extreme emotional control while everyone else is panicking. But here is the paradox of trading. A highly profitable, fast-moving trade introduces a psychological threat that is far more dangerous to your account than a losing one. The moment you see massive green numbers, you experience the whisper of greed. It is a sudden, euphoric urge to completely abandon the logical plan that got you into the trade in the first place. Greed tells you to hold the position longer. It convinces you to double your size. It urges you to ignore your carefully set risk parameters because you suddenly feel invincible. This equity curve illustrates exactly what happens when traders listen to that euphoria. A steep, beautiful climb in profits is almost instantly followed by a catastrophic wipeout, destroying the winning streak entirely. Surviving a drawdown is hard, but managing the psychology of overwhelming success requires vastly more discipline. Instead of letting the euphoria hijack the session, I actively shut it down. I followed the original blueprint and strictly secured the profits. The account grew exactly as projected. Day 3 closed as the most profitable session of the challenge so far. The market never writes checks to emotional traders. It exists solely to transfer capital from the impatient to those who master discipline, preparation, and consistency. But success breeds a very dangerous complacency. One perfect execution means absolutely nothing if that discipline evaporates by tomorrow morning. Market conditions shift rapidly. Day 4 will present an entirely new set of psychological traps designed specifically to erase everything we just gained.